Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com. Today we're going to have a look at the 31st Commitments of Traders Report of 2013. As usual, we're going to start off with the changes in commercials positions. Here we go. You can see we've got coffee on top with a 27% change in commercials positions, roughly the same change size in large speculators. Here you go, you see the change over here being larger than average, but we do see larger changes in the past. For example, over here we have a huge change in commercials positions just before this rebound in prices. We've got another example over here. So you can see that the changes do affect prices in coffee market, of course, if they do only for a short period of time. So we're going to open the 5 years chart and see how extreme this market really is. Well, we've been talking about coffee for a couple of months now because commercials are net long, and because of that, we're looking at a very bullish picture, at least in the long term. You can see that whenever that happened, we can see one example on this 5 years chart when commercials were net long, and that coincided with the lowest prices, at least on this 5 years chart. So the question is, how long would we be seeing commercials being net long? Because as you can see in this past 1.5, maybe even 2 years time frame, commercials are net long and basically bouncing off the zero line. So and until this lasts, you can see prices may easily continue their decline. So the question is, when would we see commercials start their decline, going back to net short, deep net short territories, and see prices rebounding and starting their rally? That's the big question over here. Let's move on and have a look at the S&P 500. We have a 22% change over there in commercials position, 28% change in large speculators, and what is quite interesting, even though we are in a huge rally, this is actually a bullish signal. Of course, this bullish signal may come because we had a bit of a decline in prices in the last couple of days, so it may affect prices. But actually, the big question over here in S&P 500, and of course in other indexes as well, is that we are very close to all-time extreme levels. You can see that we've actually bounced back from this decline over here. We had a nice signal. Actually, I believe in S&P 500 we had an all-time extreme in large speculators back over here, and that pretty much signaled this this top over here, and then we saw a little bit of a decline in prices. But now we're back in rally mode, and the big question is, how long would this last? Well, of course, nobody can tell how long stress levels can be building up in indexes, but one thing's for sure, the extreme can easily widen. We're not at the all-time extreme at the moment. I wouldn't be surprised if, let's say, commercials go down to minus let's say 4,000 or 5,000 contracts in net short levels. Okay, let's open S&P 400, even though we're going to see a very much similar picture as we saw in S&P 500. The change is larger than average, and of course the picture is pretty much the same. The prices declined in the past couple of days, so we may see a rebound in prices going back into rally mode again. And opening a 5 years chart, you're going to see how extreme this market really is. We're at an extreme. We're not exactly at the all-time extreme level, but we're close to it. We can see this extreme widen even more in S&P 400 as well. So that's the big question in indexes. Actually, Russell 2000, I believe the picture is going to be pretty much the same. So I'm going to show you one more market, Soybean Meal, where we had a 14% change in commercials positions, and nothing really too unusual. You can see on this chart that we do see even greater changes in the past. We had a large change last week, and as you can see, didn't really affect prices. Prices declined. We saw a bit of a rally last week. But we're going to open the 5 year chart and see how extreme this market is. We are at a relative extreme. You can see that we had a few relative extremes in the past 2 years. A great extreme would be if commercials are way above the zero line, and we're a bit away from that level right now. Moving to large speculator COT extreme. Here we go. Australian dollar, soybean oil, and lean hogs, all-time extremes all over these markets. Let's start with Australian dollar. We have all-time extreme in commercials and large speculators positions, and hey, we can see prices rallying. We've been waiting for this for the past couple of weeks, month already. I'm going to open the 5-year chart, and you're going to see. So we have this extreme. We had this extreme for quite some time now, and just prices did not react. So we've been waiting, even thinking that it may be a commercial capitulation because the extreme is there. Prices are not reacting, but they are now, and we may see prices bottoming out. This may be actually the bottom in Australian dollar. Who knows? One thing's for sure, the extreme is there, and if you look at the past, this is a great example. Usually extremes signal changes in the trends pretty nicely. Okay, so here, for example, we had them above, just because they were above the zero line being net long, that was a beautiful signal, and this decline at the beginning of this 5-year chart had stopped, and since then we saw prices going back into rally mode. So we're at a very interesting situation, and we're expecting prices to start their rally soon. Soybean oil is our next market. We have an all-time extreme over there in large speculators as well. 5-year chart is going to show us a bit more. Here we go. You can see that actually a few reports ago, I believe I talked about it. I'm pretty sure we had this extreme over here, and you can see prices did not react, which is quite interesting because soybean markets are usually the ones I always say that are reacting to COT signals pretty nicely. I'm showing you all of these examples, but of course, hey, they don't have to be 100% of the time reacting to these signals. Of course, there may be exceptional situations, and this may have been one of those. One thing's for sure, the extreme again is widening. Stress levels are building up, and we should be expecting the bottom to come soon. Lean hogs, our last market for the week. All-time signals in commercials and large speculators. We talked about lean hogs, I believe, maybe last report or a few reports ago. This extreme was there, and it's, as you can see, still widening. So we should be expecting to see a top soon. This is a bearish extreme, and here you have some examples on this 5-year chart when we had a bearish extreme in the COT report, and that coincided with a top in prices. So we're expecting a top to be visible soon in lean hogs. Okay, that's all for this week. If you would like to have a look at other COT charts, you can do so at our COT charts page. Of course, if you'd like to have a more in-depth and detailed COT analysis, hey, we've got our COT analysis page and a lot of other pages, volume and open interest analysis and highlights pages. And of course, in COT analysis, if you would like to see other great tools, long-term trend, volume and open interest scores, or the COT index, you can add all of those into your table. And of course, you can look at new COT report types, data types, all sorts of very interesting functions at our cotbase.com. Okay, I thank you for your attention. I hope to see you next week. Have a great weekend. Take care. Bye-bye.